Yeah, again, like yesterday, VIX up. Okay, this time gold and silver up, bonds up, everything else is down. Markets, namely crypto, yields. Obviously, if bonds are up, yields are down. The dollar, again, like yesterday. Um, yeah, this time silver was also up, but it's pure fear trade and it's continuation, it's contagion. We obviously have Silvergate and now Silicon Valley Bank gone. It's these last 2 days have completely turned the tables. Everything is upside down. I mean, we had this, what is it, the March 22nd Fed rate decision now. I mean, it used to be just 2 days ago, like 80% chance of a 50 basis point hike after Fed's speech. And now, that's probably completely gone. I think now it's more likely for a 25% increase, might be the last one. I still think people believe that we're going to get to rate cuts, which, the question we've got to ask ourselves is not whether a recession will spur the Fed to do a rate cut, but a financial crisis, which a lot of people were saying, oh, it's not possible. The banks are well capitalized. I love this. But look what's happened. Contagion, bam. You have this Silicon Bank that a month ago made Forbes list as the best bank. Obviously, Jim Cramer was saying buy it. That's the ultimate sell signal. So he's, wrong again. And what was I saying the whole time? That the rate increase, it's all about the yields. It's all about yields. The system can't take 3%, 4%, 5%. The fact that, oh, imagine we do 25 basis point as if that's supposed to spur the market up. The yields are way too high, and it's good. It should be high. We need a collapse. We need to let the collapse happen when it happens. But this idea that even if we cut rates, even if we were to cut rates back down to 3.5 or 4, forget the inflation story. I mean, the worst case scenario is that inflation stays high. I mean, that's the biggest dragon to slay. But for me, rates even at 4%, even if they were to cut rates a whole 100 basis point, it's not enough. And I'm not saying that they should do it. I think they should keep rates high and the system should collapse. We need to purge the debt. But people think that the cutting of rates is going to be the end all, the solution. No, I mean they'd have to cut all the way back down to 1 or 2 or 0% to really, in my opinion, have the markets just scream higher. But again, then you've got inflation running out of control, and maybe the markets go down if that happens too. I just this tendency to think, oh, the Fed will just make a decision and then the markets go up. We've got to a point where the can no longer be kicked, because if you kick the can, inflation eats you, eats everyone. And I think it's the biggest threat. And I actually think the Fed is not going to fold so easily just because banks are going down, even though the financial crisis is different to a recession. I don't know, but I just feel like, again, I've been saying it the whole time. It's all about rates, and I also said that it's not just 5%, but 4%. That's too high. So I don't know if people are overestimating how much the Fed can do here. Let's look at the markets because it's been chaotic and beautiful at the same time. I'll just say this straight away. Gold and silver really standing out. Yesterday already you had gold standing out, silver not as much because it was a fear trade. Silver is more of a, I don't know, industrial metal slash speculative trade, but gold is really the go-to in moments of fear like the VIX. Although remember the dollar is down, that usually is also a buy in fear moments. But and again today the dollar was down, although it did close a little bit off its lows. Let's look at things structured as I typically do. Start with the S&P. All right, look at this, just slam down. Obviously, yesterday we closed below the support. Continuation was in the cards. We've closed below the next support that I've identified, and I really think that's correct. I'm very detailed here in the support, but for me, next level, I can't believe we're already looking at it, but 376, let's say 375, that sort of zone is the next level. Will we go down straight away next week? Yeah, I think so. I mean, I think they'll have some meetings, and obviously on Monday we're going to have some updates on some sort of positive spin. They may release or leak some I don't know, some comments by some influential players to try and stop the rout. But to me, you know, we've had the black swan, you know, one of many. Again, we have many black swans. But I think we keep going down. I mean, what are we going to rally now back up? To rally, you'd need a Fed decision. You'd need the FDIC, or I don't know, to ring fence some banks, or to come up with some new policy. But I just don't see it happening. I see us continuing lower, actually. S&P did close a little off its lows, but still pretty bad, pretty ugly. It's not a crazy route, 1.5%. It's orderly declined. It's not one of those -5% days, but still technically, it just looks like it's destined for here. A small move back up again, and then a breach. But so far, it's just been down 2 days in a row and pretty heavy. This is some elevated down move. I love it. I love this volatility, and I really like how the market's going down because it deserves to be at new lows right now. So S&P weak close looks like it's going to keep going down. Let's see what happens Monday, but for me, I'm loving it. I did no trades today, by the way. I mean, I was green. I know most of the world was completely destroyed, but when you're in metals and the metal equities, right? GDXJ were quite good, especially early on. They're like up 5%. They lost a bit of ground. I'll cover that, but they were sort of fighting between following gold and silver and following the markets. One was going up, one was going down, and it sort of ended up in the middle. We'll get to that later. Let's look at the Nasdaq. That was the one indice that did not close below its support yesterday, Thursday, and now it did. So that will add a little extra pressure. I don't know if it can go all the way to its next support that easily. That's a bit of a move down, 5%. But, what we've seen so far is an indication. If we have a little surprise on Monday, there's another bank. I don't know, maybe Credit Suisse. Maybe it's Credit Suisse's turn. That was down 4 or 5% as per usual, looking absolutely disgusting because now, you got these small banks that have started a little domino. And as usual, the banks, what they've done for years is basically borrow short-term debt, to buy long-term debt because it was a better yield. So for them, it's just guaranteed extra yield, free money. Except now with the interest rate environment we've got, and everything has a delay, right? The Fed increasing its rates has a delay on the economy in general and on the balance sheets of banks. But now they're incurring a lot of losses. And I saw a lot of charts out there recently, and you've got a lot of banks that have incurred a lot of unrealized losses that are going to have to be realized. And imagine selling all these mortgage-backed securities or just selling all this debt that they have at the same time. Let's just say that you could have a real cascade effect, and it's just a consequence of this bubble economy. And the chickens are coming home to roost at the same time around the world on a very weak economy. And you've got the geopolitics in the background. For me, like I said, you've got loads of black swans, and it just takes one pin. And I think we've had this pin now. Remember, I think it started with Silvergate. Now we've got the, Silicon, whatever it is, Valley Bank. And again, is it Credit Suisse? Is it Deutsche Bank? Is it another one? Is it a corporate institution? It's it's a domino effect, and it can't stop unless there's some Federal Reserve step in or something else. So, and they're in no position to step in as they did before because now inflation's a problem. They used to say we need inflation to be higher. That was their excuse to print, but now everyone knows that inflation is supposed to be the biggest boogeyman. So it's different this time. Okay, Nasdaq, closed below this support, quite a way down, 4-5%. Let's see, baby steps. Could we have a small run? No. Normally, I would say yeah, we could go up a little bit and come back down, but honestly, I just don't see it. Too much fear out there. Let's see what happens Monday or even Saturday, Sunday. We could have some news Saturday, Sunday to prep everyone for a Monday. Dow Jones, look at this, already at its next support. So, you can see tagged it very nicely, closed a little above it, but it's basically trading at the lower range down here. Let's call it 31,750. Actually, I mentioned that in my last video. Now I got to pay attention to those little texts I write in my videos because they're really coming true the next day. But yeah, they tagged 31,750. What's it going to do, in my opinion? Sideways down. Remember, the Dow has a lot more downside to do because it had a big upside. I remember saying it's hard to imagine the Dow coming all the way down here because I did see the markets going all the way down there. But we kind of made halfway down, you know? So we're, I don't know, we're like 40% down already from the highs over here until we get down here. So not much more. But yeah, so we're just sort of tagging along here, and I think the S&P and the Nasdaq will continue down. So the Dow. So yeah, I'm not going to put a number on it right now because there's no need to. Just the general direction will do. The Russell stood out just like yesterday. The Russell was the only stock, the weakest one. And it just, and I remember we saw this sort of just on this day, what was it? Sort of Tuesday, Wednesday, early this week. I noticed that the Russell was sort of acting a little extra weak compared to the other ones. And then, yesterday we had this smash down move, close at low of day, unlike the others. And, we were there. I actually didn't think it would slide through this support. I thought that you have this horizontal support and this ascending support, and together they would sort of act as some strong support zone, and it would, maybe go a little bit below, but close above it, whilst the others underperformed the other indices, but not straight away slice straight through it. It probably rallied more than the others off its lows, but look at that, down basically 3%, whilst everything else was 1.5 worst case scenario. So completely underperformed again. For me, next support is, I'm not going to say this low because honestly, you have several lows around here too, but let's just say 170. Actually, yeah, 170, 171. It doesn't really matter. I'm not trading the Russell, but yeah, if the Dow, the SPY, the Nasdaq keep going down, I think the Russell will find support here because it kind of has to. Because if it starts closing below this, you've got just the last level left. And it would make sense that the Russell leads the way down. For me, it's the Russell, the Nasdaq. The Nasdaq, because it's speculative, all this tech stuff, which led the way up for years. It makes sense that it leads the way down. But the small caps, that also tended to outperform on the way up. And also it's all the small companies with higher debt. So I'd say it's riskier than the large caps in the S&P. Yeah. Now let's look at the VIX, finally worthy of attention. Now, a little disappointed with the close because it had a smashing pop at one point, basically at 29. But, look where we were, 18. I was honestly ready to give up down here. I kept on saying, why am I even covering it? Finally, it did what it was supposed to do. Nice move up there on that Thursday. I thought we'd get to 24, maybe 26. We went right through 26 at one point and basically 29. For me, sort of 30, this descending, I didn't think it was worth talking about anything above 30, but we kind of almost touched it. We were like $1 away. But, we did close basically between 24 and 26, around 25. So that's the thing. The VIX, it really is used to getting shorted. It's kind of a shorter's dream. When it gets crazy spikes, you short it and you're almost guaranteed to make money, but you don't get caught on the wrong side of that either. So you could just end your trading career in one day. So very high risk. But, finally the VIX starting to move. Okay, at least it was up 10%, which kind of makes sense on a day where the markets are down 1, 2, 3%. But at one point, I think it was up 20. So maybe even more, but about 20. What do I think might happen? Well, if the markets keep going down, maybe the VIX can test 29 again. I don't think it'll get higher than here. I really don't. I think it would take an enormous scandal if that was to happen, especially if it was to close above it. So I think you're pretty safe shorting, let's say, or selling just below 32. So that's the markets, big down, not catastrophic, but still very exciting. And, next week could be even worse. And for me, that would be better. Let's look at yields, which honestly have given up quite a lot. Look at this flush. Now, I was saying yields keep going up, keep going up. They did, but this is the effect. It created this black swan. Basically, everyone got scared and they all bought bonds, not because they necessarily thought yields should go down because of the Fed. It was just a reactive move. We're buying bonds. I'm scared. Get me out. And also, part of the reason that everything's been going on is everyone's taking their money out of banks because well, I can just buy this short-term debt and get 5% interest. Whereas if I leave it at the bank, I'm getting zero. So it's safer to buy bonds and I'm making more money. So this is, yeah, that's kind of a conundrum for the Fed ultimately. And I think, by the way, I think yields will stabilize. I think at one point, probably, let's just look at the 1 year around here, actually, it'll find general support and go back up a little bit. But let's see if there's really a market crash, financial crisis, you could get bonds just, well, yield coming down as bonds keep getting bought. But I think at one point, I think bonds will not be as attractive. So I'm not really sure what to think of yields. And also it depends what the Fed decides. What does the Fed decide on March 22? Now we're quite a few days away from that, but until then, I'm going to be trading it technically. I'm not in bonds, but I'm going to be judging the trades I do because bonds affect them on the technicals. And for me, this area here on the 1 year should act as support. Also, you have this ascending that coincides. So, but yeah, otherwise just straight down move. I did think this was possible in the 2 year. I said we might get to 4.75-ish. Well, look at that. We've gone even lower. I think this is support. If it goes lower than this, I mean, at that point, I guess you have to start looking at the ascending. I don't see it going lower than this, not in one big drop. So I think $4% is a floor, just above 4%, But yeah, I expect it to find support essentially where it is, 4.5. The 5 year, it's all following the same trajectory. Well, I'm not going to guess straight away. Let's just see what happens. But you can see the ascending support coming in just in case. Again, the yields are a bit like the dollar. When you have market panic and just capitulation, panic selling, short selling, and just computers going crazy, you can get spikes up and down that sort of ruin technicals and don't make sense, or you don't expect it. That's not the case yet, but it's just the beginning. The 10 year, sort of same thing. May have to redo this chart. I'll do it over the weekend. The 30 year, already kind of testing this this ascending support. So I have to watch the 30 year. If that holds, maybe that provides support to the other sort of 10 and 5. The EU yields, okay, that's also following. I don't see why this would go all the way down either, but watch out for EU banks, right? The EU banks are arguably worse. Deutsche Bank, I think, is the one to watch for Europe. Credit Suisse for Switzerland, but they're all international banks anyway. Just watch all the banks. The banks stole the show and the money. Okay, so that will do for yields. Let's look at the dollar, which also acted a little abnormally. Now, I didn't think it would come all the way down here, but it did. But it did tag it and come back up. A lot of people thinking, like me, it's a bit strange to have the dollar down on a fear day, but there you go. It's come down. It did bounce off its lows. Obviously, you've got yields coming down, so maybe it's less attractive. The dollar is therefore less attractive. I don't know, but it did have a crazy move up. Not crazy, but a pretty decent move up. So it's just some selling. I wouldn't call this bearish at all. But you don't really want it to close below 104 if you're bullish the dollar. Now I'm in gold and silver, and I don't mind whether it goes up or down at this point because I'm happy with my position. So I don't mind if the dollar goes down, but I still expect it to at least hit 108. I need to see what happens next week actually with the dollar. It's just a little hard to call because I don't I don't know. I'd expect the dollar to actually go up a little bit. I think it's had its little 1 or 2 days of selling, but if the markets continue to crash and it becomes very panicky, normally the dollar should act as a safe haven, a false safe haven, and move up. So I don't know. I'm just gonna say I'm unsure about the dollar, but again, when I'm not sure, that's what the charts are for. Very easily identified resistance. It's been, I've had this line in there for months. This one I've just introduced because you can see why. 1, 2, 3, 4 times now it's hit. Also, it's 104, a nice round number. So we'll just let the chart do it for us. That's the dollar. Let's look at commodities. That's a little bit mixed. Copper, for me, the hardest asset to call at the moment, sideways on a crazy day, just, sideways. That's a bit strange, but you can see that, 3.95/4 is kind of trying to act as support here. And for now, it's succeeding. I still think this descending line is correct. And a bit like the dollar, finding it a bit hard to call, so I'll just let the chart do it for me. It speaks for itself. Natural gas, which I bought a few days ago, essentially around 2.7, let's say, going a little lower, not a crazy down move, but maybe down with the markets. It's still an absolute miracle that, if you can get it this low, and I will be adding again down here. Usually when the market's crashing, I like to be very, very cautious and just go in very, very slowly. And I'll do that here with natural gas because I'm not that scared. I mean, look at this. This is a historic opportunity, in my opinion. So very low risk versus reward ratio involved here. So I'm looking forward to natural gas coming basically, let's say 2.2. I'll probably start buying around there, just a little second entry, because that will mean I was in sort of here, let's say, yeah, about, almost 20% down move on a commodity, a global commodity already at absolute lows, no problem. So let's see if the trading gods allow natural gas to go even lower. These are my little LSE ETFs for natural gas. I think I'm in NGAS, yeah. Oil, finding a little support after tagging the ascending, makes sense. Yeah, it's stuck in a very tight range. I think I'm going to leave the lines in. They're making sense. They seem to be working. So I'm not in oil. I'm in one little oil stock, but it's not really moving too much with oil. So yeah, I'll just watch oil. I still think overall oil is, going to go back to the 90s and ultimately higher. But, who knows, if you've got a financial crisis, everything's going down, absolute crash, everyone's selling everything, liquidating, everything goes red. Sort of the first days of the bear market. Also, remember the COVID days when everything was down, things that made no sense, things that should be green were down 20% 2 days in a row. It's just total chaos. And that's when you really wish you had money on the sidelines. And that's when you should act level-headed and do what you know is correct and don't let the emotions take control of you. But, even me, I would fall victim to emotional trading, even in such moments. Gold and silver. So look at this. I thought yesterday, yesterday I thought it was a fair trade. It was. I didn't expect I thought maybe we go, I don't know if I mentioned it, but obviously it's possible that a continuation would happen today. And had I spoken about that, I would have said that this is resistance. I would have said, 1860, which is 1858. Today, we closed right above it, and you can see the next resistance here. So it kind of acted in line with technicals, I would say, for the next level. But this surprised me. I didn't expect this. And actually, now I can delete this because this is now invalidated, but very impressive stuff. Again, gold and silver were one of the only assets that were green. It's really just bonds, precious metals, VIX. And usually the dollar would be in there, but even the dollar was excluded. So it's a very special category of assets that were up. So gold should feel proud of itself. And, gold up 2%, silver up 2%. That's extremely rare. If gold's up 2%, silver should be up 6%. Something like that. So it was fair trade because of how much gold outperformed silver. Silver should be 6 or something like that, maybe even more in my opinion. So definitely fear related. But now technically gold looks good. If the fear continues and people still flock to gold, then we could, things move quickly. Look at that, that's $40 in a day. You could easily go back to 1960 in next week. If the financial crisis starts to play out, there's lots of fear, people buy gold. And what if the Fed starts to pivot in reaction to it? Well, then gold really goes up and goes straight to new highs in the next week. I mean, this could really take off. And honestly, I haven't even considered it except now. And remember, this goes all the way back down here. This is the all-time high of gold. And also remember, we're in inflation, high inflation. Gold should be at new highs. The only reason it's not is because of this perverted world where everyone thinks, oh, inflation's high, therefore the Fed will fight inflation and win, therefore gold goes down. But no, it's inflation is high, gold should be high. Gold should be pricing it in. So there's all the reasons in the world for gold to go up. And that's why I own gold related assets, because that's where I want my exposure, just sort of, just sort of leveraged exposure to that sector. So yeah, gold very good, bullish. It closed above all those other highs. And fundamentally, all those reasons, it's basically bullish. And let's see what happens to the dollar. Because if the dollar goes up because of fear, maybe gold goes up with the dollar. Maybe this is what it takes an occasion like this for the dollar to start to move up with gold. Because if the dollar moves down, then gold's going up. If the dollar moves up, maybe it's going to go up because there's a lot of fear and gold is still going to go up with it. So gold is looking good. That doesn't mean the miners are looking amazing, but gold is looking good. Silver, okay, not bad. Again, everything else is red. Okay, some commodities are green, but if you look at stocks across the board, they're all just obliterated. So for silver to be up 2%, you can't be mad. But gold is up 2%, so silver should be up 6%. Also, the chart of silver, there's a lot more resistance. Silver, the equivalent would be sort of silver, in my opinion, sort of trading here, because gold took out its last high of, let's say, March. Silver should be basically trading here if it was to be the equivalent of gold, just below this trend line of 22. So I would say 21.50, basically. So, and it's underperforming, we know this, but it can catch up real quick. Look at any silver chart when gold starts to take off. Silver has a delay, and then it just catches up and makes up for it. So if gold is going to go to new highs, and I can't believe I'm saying this, and I don't think it's going to happen right now. It all depends on next week and March the 22nd. But this month, I think we'll know. But if gold is going to go to new highs, silver has just got so much ground to cover. And this is not new highs. This is new highs up here. And this is not even new highs. It's 50. I mean, that's why everyone's trading silver. A little breakout here, even though you might think you're chasing, you've got a lot of upside. Like, you don't have to move yet. But if you see a breakout, I don't know. I'm watching this. And again, I'm trading the miners. So this is just one of the many charts to be watching next week. There's a lot of things to watch. And I'm going to be watching it like a little hawk. Gold, silver, yields, dollar, bank stocks, the news, the markets, etc., etc. So anyway, I think the point what I'm trying to say is silver is underperforming. It should be trading here, but it can still start to make that move. If it does, watch out. It can move quickly. And remember where gold is. And if it starts to go here, look how close we are to all-time record history highs. And remember how far away silver is from that. Now, we've known this for years. Silver sort of fails every time, but look at this descending. For example, you start to take, this little section out here, we're quickly rallying to catch up with gold. That looks like it's going to make new highs, and a close above this descending. And that'll take 2 or 3 weeks at the least. But it can start to scream up. And once you're testing 30, you're probably just going to retrace a bit and scream above, and then $50, we can all retire. But anyway, silver's underperforming, but watch out. I think that's the summary. Let's look at GDX and GDXJ. Now, this is stuck between following the metals and the markets. You can see the red candle looks it's a bearish shooting star, but if you know why it looks like that, it's not as bearish as you think. Remember, it's green. All of my gold stocks, pretty much my watch list, all of my portfolio, they're all green. But if you just scroll a little lower, everything else I'm watching is just destroyed. So I say that to say this. The miners were green, and it's not a bearish day. Why did it give up and close near the low of day? Because it followed the markets, and because the metals towards the end also gave up a bit. But still, it was stuck between following gold and silver that were up 2% and the markets that were down 1.5%. If gold and silver continue to move up next week, I reckon the miners will be green again. So despite you seeing this red candle, it's a green day. It's just that it, closed below the low, closed below the open. But we need to sort of see a close above this area. Again, it's that same sort of March the 3rd high to suggest maybe there's more room to run, but you don't really want to wait until then. It's still 5% until you know which way it's going to go. For me, that's too late. Now, the good news for me is I bought back. I was selling this move and I was worried that I sold too much. I remember saying that a lot. Then all the way back down, I really avoided buying. I finally bought a little bit, came up here, sold a little bit, still hold a little bit more from what I bought here, came back down, bought a little bit from what I sold. It's just constant, swing trading my long-term position. So the point is, I'm happy with what I hold here. So if we start to collapse, I got lots on the sidelines. That's the point. I've always had too much on the sidelines, so I don't mind a collapse. If we go higher, I'm very happy with the amount I have. I can constantly trim on the way up to keep the same value as it's worth now. So I'm kind of in my own personal invincibility zone. Obviously, when the market starts to collapse, I'll start wishing that I sold more, and vice versa. If it goes up, I wish I bought more. But overall, as I'm completely sober and emotionally stable right now, I can tell you that I'm very happy holding what I hold. But I'm just considering, both scenarios. If we go down, honestly, if we start to collapse and I see the miners start to follow the markets and the markets are really ready to flush and maybe test their lows and therefore break their lows, I'll say, look, I'll just go in very, very lightly, and thinking that we're going to see new lows in the GDXs, despite how strong silver and gold are. It's just more reason to buy it because I know they're the ones to really move up the most when we found the bottom or when they cut rates because that's how they're acting now and fundamentally that's how they should act. So yeah, it's green. You should be happy it's green. Recognize that it can go down with the markets, but it wants to go up like a buoy underwater. It wants to go up, and the metals are sort of forcing it up somewhat. So it's I think it's a great scenario to be in. Relative to other sectors, you're holding your own wealth, even getting a little richer, whilst all these other sectors and industries are getting destroyed. Some of them with good stocks. There's one or two good stocks I want to buy. There's Google, I'm thinking of buying later, Amazon. Whilst they're getting destroyed, you're also getting a little richer. So relatively speaking, it's beautiful. Anyway, that's the miners, that's the metals, that's everything. Let's look at Bitcoin that got slightly decked today. It did close significantly off its lows. And now it's closing. I mean, the day is not finished, but it might close above yesterday's low of days. So that's quite good. But it's come down so much. And again, I think the markets will keep going down next week. And I think Bitcoin's kind of forced to go back down too. And by that, I mean 18,500, just retest this breakout zone. And if we get there, okay, I think we will bounce from there because this is too much. It'd be oversold on a short-term basis. But look at this. That's why I think we'll find support there. You've got this strong horizontal. We also have this ascending. So, around here, let's make it bigger in case I'm wrong. Around here, find a bit of support, bounce a little bit. But if you break this zone, if we get there next week, Monday, Tuesday, Wednesday, or whatever, then this chart will look so bad. It's honestly like so likely to go lower. And if you've got Bitcoin flushing 15,000, you have a problem. And I think it could even spread to the other markets. Everything's connected. This would obviously affect some Nasdaq stocks, the Nasdaq itself. Look, you have this Silvergate that went bankrupt. I'm not going to go through it now. I'm going to make some specific videos on this during the weekend. But crypto mining stocks, some of them are looking really bad. MicroStrategy, some heavy hitters. So everything connected. Dominoes. Honestly, watch out. If this comes down next week and it bounces and fails to bounce, this could really get ugly fast, and drag down the rest of the markets. So that's crypto. I wasn't going to do any banks, but now that I'm thinking about it very quickly, my friend Credit Suisse, why not? I love to watch it. Plus, it's a banking day. Not the worst of them, but still absolutely disgusting. closed down 4%, 266, worst close in history, I think. I mean, you have to go back. Yeah. That looks like a little Chinese fraud. That looks like it's going to go bankrupt, and that's Credit Suisse. SIVB, Silicon Valley, this is now bankrupt. It stopped, didn't even trade today, right? It's gone. FRC was another one. Look at that. Zooming out, I'm on the weekly here. These are banks. These are banks that otherwise were renowned, like, strong on CNBC. And really the last sign you get is when the CEO comes on and says, we are rock solid, calm down, nothing to worry about. We have good reserves, all this usual trash. And then, 2 days later, it's totally insolvent. Deutsche Bank, this one for me, I've been watching for a long time. I really think this is toast. And if Deutsche Bank's toast, the EU's toast. Okay, I'm not going to go through all the banks. It's too easy to trash them, but watch out, really watch out. I'll leave it there. I'm sure you guys really enjoyed yourselves today. I will make more videos this weekend. I'm going to do little specific sectors. I also want to start covering uranium a bit more because I don't cover uranium, and that's a worthwhile commodity. And crypto also, because some of these crypto companies, look at MicroStrategy, or they're leading Bitcoin down, I would say. And if one more of these goes bankrupt, then you could take the whole sector below 15,000. Anyway, I'll end it there. Enjoy the rest of the evening, and have a good weekend.